we're covering Adobe today in the video. So I haven't covered this company in such a long time. So loading this up in the stock research tool, let's go through the numbers of Adobe and see what's going on with this business. It has fallen quite a bit since the last time I've researched it. And the 52-week range, we're currently sitting at 381, pretty low from our high up in, I guess, late 2021 here based off my chart. Yeah, 699. Wow, we've fallen quite a bit. So let's go through the numbers and see what's going on with Adobe, what they're doing right and what they're doing wrong. We are currently grading this company an 8 out of 10 in our financial valuations category, and that looks at the company's cash flow statements, the income statements, as well as their balance sheets. So what are they doing wrong? Starting off with that, well, they have a decently high PE ratio, and we could take a look at this. We want to find companies that are trading at a PE ratio, ideally 22.5 and lower. We have on average 49.92. However, on a trailing 12 months, we can see that there has been somewhat of a decrease. This is another section of my software which compares the trailing 12 months and the 5-year averages. So seeing this PE ratio go down, I'm hopeful, but it's high nonetheless. With Adobe, our current ratio is currently sitting at 1.07. Now, that's not entirely terrible. That just means that they have enough assets on hand to cover their liabilities, but from a 1-to-1 ratio. Ideally, we want to have a decent margin of safety, so this should be 1.5 or higher. But it's not the worst, but it's not getting any points for me. Now, apart from the PE ratio being pretty high and the current ratio being 1.07, they're doing a lot of things right. Let's look into the software. Take a look at this. We have a lot of green across the board. So we have a very high ROE sitting above 15% at pretty much 30, and that is phenomenal. A huge EPS growth over the last 5 years. A low debt to equity sitting at 30.93, so that is phenomenal. We want to see this number beneath 50%, and we have that no problem. On the right hand side of the category, green across the board. They are buying back shares, which is phenomenal to see. Small percentage, 0.83%, not huge, but it's a buyback nonetheless. Our net income is growing, our free cash flow is growing, our revenue growth is growing, and we have a very high return on invested capital. They are doing a lot of things right. So here's the thing, folks. I see a lot of green on the board. I have a score of 8 out of 10 being ranked based off of their statements, and I see a price going down. I see a price going down with a very strong business. Like, you can go and take a look at their income statements and stuff like that, and take a look at this. Their revenue just increasing over year, but the price is going down. Listen, this gets me hyped. So what we're going to do, folks, is we're going to jump into our price analysis section, because other than that, like what we've just been shown here, there's hardly any red flags with Adobe other than our PE ratio and our current ratio being what they are. Our average free cash flow is $4.5 billion, high ROIC on average for 5 years, and a current trailing 12 months is high Almond Z-score and a decently high Piotrowski score. They're doing a lot of things right. Let's jump to a price analysis section here, and what we're going to do, folks, is we're going to look at a 10-year analysis. So I'm going to price out Adobe and then discount all this stuff back, and we're going to find out what we should be paying for Adobe today. Okay, folks, so before I go to the last section of the video, if you're enjoying the video so far, hit that like button, hit the subscribe button. And if you want to get your hands on the software, stay tuned. It's coming out to you, my viewers and subscribers. So jumping into the price analysis section here, take a look at this. I want to price out Adobe based off some conservative revenue growth numbers, so like 15, 15.5, and 16% going forward, even though they've shown to do 20 in the last 5 years and 10 years, 15. I'm trying to keep within what they have been able to do. Now, in that regard, I kept the profit margin in the same realm, same thing with a free cash flow margin. I've given a discount to our price of free cash flow and PE ratios by putting them into ratios that I believe that they should be at. So obviously it reflects our PE ratio is 36.78 currently. I'm pricing it out at, let's say if it was at 14 or 16 or 18. Click and calculate. We're going to see what the software is going to give us, and it'll tell us what we should be paying for Adobe today. But this is a company I would like to own. And now I think last time I analyzed this business, it was overvalued. So, but they make phenomenal software. And if you're in the creative field, or you know people in the creative industries, they're pretty much almost like the gold standard for a lot of things, from Photoshop to Adobe After Effects to Adobe Premiere. And wow, take a look at this, guys. Take a look at this. On the conservative side, so the lowest from revenue growth, we're almost at that fair value, and our average calculation comes out to be 462.68. On average, on aggressive side is $500. So currently, based off these revenue growth numbers, they're crushing it, and it's undervalued. I am very impressed. Wow, I was honestly not expecting that. So even if their DCF calculations, look at that, green across the board over here, folks. On our conservative side, that's 50% revenue growth. They might do better than what I put in. Out of curiosity, if I could just drop this down to, let's say, do 12. Actually, how about this? We'll do 10. Well, that is not hitting regardless, but I'm curious for our middle section. Let's just do 10, 12, and 14, because I'm really curious to see if I can make the DCF calculations still pop. I'm more so curious about our moderate numbers here. Okay, so yeah, conservative category is pretty much a write-off, but on our moderate side, 365 in a DCF based off of 12% revenue growth. Do I think that they're going to do that? I think they're going to do better than that, personally. But it just goes to show, folks, giving ourselves a proper margin of safety, we can see how low can we actually go with this business. So with 15% or 15% revenue growth, I think it was 15.5 that I did here. Let's see, 15.5. Calculate that. It's showing to me that it's a fairly undervalued business. They've been making improvements year over year. What are your thoughts about this? Having this information here, this is the start of a deeper process. Now I look at the management team, seeing what they're doing, what the moves that they're making in their software space. However, from a price perspective, it is very, very attractive. Now, does this mean go out and buy Adobe today? No, this is just the first step. Like I said, the software here helps me screen these companies and allows me to understand, okay, from a numerics perspective, where does it lie, and am I giving myself the proper margin of safety? As well as if I want to just check in on what is actually happening, I can do that all here on the main page. I have the latest news articles linked here in the software, so I can figure out what is actually going on with this business to try to do more research and more efficiently. And if I don't want to look at anything numerical wise, I can look at things visually from our charts. And yeah, that is pretty much the video, folks. If you enjoyed this video and if you enjoyed this analysis, hit that like button, hit the subscribe button, write down the company down below in the comment section below of a company you want to see evaluated, and I will get to it eventually. But Adobe, as it currently stands, it is undervalued based off my numerics. Now, I've been as conservative as possible. Let me know what you think. Write it down there, and I will see you in the next one. Thank you so much for watching.